Okay, let's talk some more about the highlight this week. Of course, the 75 basis points expected from the Fed on Wednesday. Let's bring in Nick Griebenow, portfolio manager at Shelton Capital. Like the rest of us, trying to navigate this. Nick, looking at the funds so far, you're also ahead of the market, down on the year, but still beating the average passive fund. How do you keep that going here?
Absolutely, yeah. I think the way to keep that going is just to stay disciplined and stick to strategy. You know, we've been leaning towards value-oriented names in our portfolio in the equity income fund. I think also taking advantage of this elevated volatility. You know, with the Fed expected to raise rates by 75 basis points again this week, VIX right now we've got holding in the 25 handle 26 range. So I think continuing to be consistent, continuing to harvest that volatility risk premium, generating that cash flow, and making sure that we're in as safe haven of names as you can be in the equity space at this point.
So I guess you probably like what you just heard from Rob there about his view that value stocks should continue to be favorable in an environment where inflation is pretty high and sticky.
Yep, absolutely, and couldn't agree with that more. Especially with this inflationary environment, growth slowing down, value-oriented names is definitely a good place to be. And we're targeting names also that have a lower beta than their overall sector in general. Just again, atypical return pattern with covered calls. We've got more downside exposure than upside exposure. So definitely want to be looking at those names that are of good value, relative ratios to their sector. And then, like you say, continuing volatility through the end of the year. We've got the Fed raising rates, trying to guide us into this soft landing, the ongoing war in Ukraine. So a lot of reasons to see volatility remain elevated, which is great for us. We've had a couple of years of real anemic volatility here recently. So having this uptick was bringing new strikes into play. We're able to write calls farther out of the money than previously, and really it's just a big tailwind for generating cash flow with covered calls.
And so you're doing a very income-oriented style approach. You're not looking to hit home runs necessarily with stocks that are up hundreds of % on the year. Is that correct?
Yep, that's correct. Yeah, especially with just the return pattern that we have on covered calls. You're not expecting to see any home runs. If the stock doubles, we're not going to be able to ride a stock all the way up to that top price level before being capped with a covered call portfolio. So we still do certainly have quite a bit of potential for capital appreciation. We're not typically covering the entirety of any given position in our portfolio, but our strategy is focused on cash flow. Right now, we've got about a 10% yield on a trailing 12-month basis. So continuing to be disciplined, consistent, and generating that cash flow and that yield, kind of providing an alternative for investors to traditional fixed income investments is really the niche that we look to be in.
Some of the bigger holdings here are some of the mega caps. Microsoft at the top of the list. Do you worry about any of the potential capital losses with stock if we keep seeing big tech drawdown?
I worry about it a little bit. I mean, no more than, I guess, any equity-based investor at this point, but especially with some of those big names, the Microsoft, the Apples, those make up such a large component of the S&P 500 that it's kind of hard to have a fund and not have exposure to those names. Certainly they're going to be on the more volatile end of what we have in our portfolio compared to some of the other value names, some of the other sectors, the utilities, consumer staples, that kind of thing. But still, looking to maintain exposure to those, in case we do get a bit of a run in the market, as well as, we're not looking to have any outsized position in one given security. So while we might have that exposure, they might be in our top 10, they're still not going to be, an overweighted position to any great extent.
Okay, makes sense. Nick, appreciate the walkthrough.
Absolutely. Thanks for the time.
Yeah, absolutely. Nick Griebenow joining us from Shelton Capital. EQTIX is the ticker.